Okay, in today's video we're going to take a look at a recent trade setup. We're going to look at the trigger that we saw, and then we're going to talk about the next immediate decisions. Now this was a trade setup in the IWM ETF, and this is where we had a cluster in yesterday's session. You had a confluence of at least 1, 2, 3, 4, it looks like at least 5 price relationships, if not more, that came in between this 133.05 to 55 area. Now, one of the main price relationships was the 618 retracement of this prior low to high swing. There were also some other projections of some of these prior swings that also came in on top of this area. There were extensions of prior swings that would be, for example, a low to high, and then you extended it beyond 100%, and we had looks like a 1272 and a 1618 overlap inside of that area too. Actually, here we go, 1, 2, 3, 4, 5, 6, 7 price relationships. Okay, so that was a setup. When I see a cluster of price relationships, I look at that for possible support, or at least, you know, standout support, because there were so many price relationships. So when you see that, what you do is you don't just buy against the zone. Okay, maybe some people do, but I usually have them look at triggers, which is essentially price action that tells you that it's worth placing a bet. So when we tested and held that area, basically what you want to do is go down to a lower time frame chart, and this example of a trigger is on a 2-minute chart. This is where we tested that support. Now, as far as the price action you want to see, if you're looking at, you know, the market going straight down into this support, what you want to see is a shift of the bearish pattern of lower lows and lower highs into the support decision, shift to a pattern of higher highs and higher lows. You also want to see a moving average crossover. That's what I like to use as a trigger. Now, there was also a squeeze trigger on the buy side that you could have used. But bottom line, once we both had the 834 EMA crossover to the upside, and we had also taken out a prior swing high, that's when I knew it was okay to enter the buy side and then place a stop either underneath this low or underneath the cluster that I just showed you on the daily chart. Okay, and we had a nice rally. So now what? Well, typically I look for a 1272 target of the swing into the zone. So that means that my potential upside target off of this low is still higher. It's up at this 140.24 area. But I'm not going to tell you that I know that we're going to continue to rally from this low. Okay, all I did know for sure was that I had support, and I had a buy trigger, and I had risk definition. I do have a target, we just don't know if it's going to get there. So what we have to look at are, what are the hurdles on the way up? And here's a very important one that we hit in Friday's session, from taking this prior rally, $3.40, this rally, $3.56, projected both of those from the new low. Current rally swing here, $3.38, very similar. It also overlaps a 786 retracement of a prior swing, and this is where we stalled. So we really need to clear this if we're going to have increased odds of a continued rally towards this target. And on a failure to do so, you also have a risk definition for a short, if that's the way that you would rather go. If we do not clear this area, which comes in at the 136.99 to 137.15 area, and you see sell triggers according to the time frame that you're trading, it's okay to take a trade on the flip side and define your risk above here. See, I can just tell you where risk is defined on each side. I can't tell you which side's going to play out. So anyway, bottom line, what I do is I identify key support and resistance decisions, and you basically use triggers along with it. That's essentially the formula to make money with this work. Have a great long weekend, and I will see you guys Tuesday.